The Fed's speech today could give us clues about a future US interest rate decision. Looking at this and more, I'm joined by Gregory Daco, head of US macroeconomics at Oxford Economics, to look at this and more coming out of the US. Just out now, Gregory, of course, was the US GDP growth rate. Considering that the US economy only expanded 0.2% in the first quarter, the weakest expansion since the first quarter in 2014, what's your initial reaction to the data?
Well, it was a surprise on the downside. We had been expecting growth slightly above 1%, but it did come in very close to flat. And the underlying details weren't that encouraging overall in the sense that final sales actually contracted 0.5%, and inventory added about 0.8 percentage points to growth, which means that some of that will be worked off in Q2, and thus Q2 is looking a little bit weaker than we had expected to. That being said, there is still some forward momentum, and consumer spending was in line with our expectation and is expected to rebound in the second quarter of this year.
The Conference Board's Consumer Confidence Index dropped to a 4-month low of 95.2 in April, bringing to an end the colliding cooling consumer spending and upbeat confidence seen since the end of last year. Are we seeing the optimism end?
No, I think it's premature to call an end to this optimism in the sense that consumers are still feeling relatively optimistic about the outlook. Yes, consumer confidence or sentiment both actually gave back some of their gains in the latest readings. But that being said, they're still near record highs since the end of the Great Recession, indicating that consumers are still overall quite optimistic about the prospects for growth and for payroll gains. And their views on the current situation, although it did fall back in the recent readings, are still quite strong. So overall, we feel that with a low gasoline price environment, a low inflation environment, and an environment in which employment growth continues to be strong and wage growth is expected to firm, we do see that environment supporting stronger consumer spending in the months to come.
There's pretty much no chance that the Fed will hike rates later today, but no doubt there will be clues as to whether a future liftoff remains a possibility. What will you be on the lookout for?
Yeah, I think that there is almost no chance that they'll proceed to rate liftoff right now. If anything, the latest reading on the economy increases the odds of pushing back the rate hike. June seems to be more and more unlikely, given that it's only a few months away, and the economy still seems to have relatively modest momentum. We have a call for September, and we maintain that call. But it is true that there are some downside risks to growth, including weaker mining activity and drags from the international cross-currents, including the stronger dollar and global growth that is still sluggish. And those downside risks push the risk of a later Fed rate hike that could be pushed back to December. But we still believe that given the fundamentals that are quite strong in the U.S., September is not off the table in terms of starting the monetary policy tightening environment.
That was Gregory Daco from Oxford Economics joining me there. That's all from me for now. Remember to keep clicking back to Dukascopy TV though for regular updates and exclusive interviews just like this.